In this video, we are going to be analysing Moderna, ticker MRNA. Now, this is a good and kind of interesting stock. It's a bit different to the rest of the overall market in that it's not that near to its 52-week low and is providing trading opportunities as actually a short instead of a long. The reason I like this is, again, I don't always, for example, if the markets are pushing down, obviously we're trading a mean reversion strategy, so we're usually playing against the trend. So obviously I never want to have all my swings in the same direction, just because, let's say, if markets do continue weak, the individual stock follow that direction, we're losing money on, say, the long bias trades. We want to have some shorts that kind of offset that and kind of hedge them, because again, as the individual stock, they may still play out even if the overall market goes kind of against our direction, but it is kind of still just a hedge in general. So again, I don't want to only play long bias. Even in this kind of market, I'll probably play a bit more long bias because, again, we're at least using this strategy, kind of playing against the trend, but don't want to have every single one of my positions against the trend. Just in that, again, that takes on a lot of extra risk, so looking to have some in the same direction. Now, on the left, obviously, we have the 6 month. On the right, we have the 1 year. 6 month, very clearly, especially on the 1 year, it's clear as well, came down to our deviations. These caught the bottoms, kind of the bottom a few months back. Now, obviously, since then, strong rebound or kind of bounce to the upside, definitely a reversal. And now we're hitting into that third deviation on the 6 month. To me, that is when I flip a very bearish. Reason for that is, especially on large cap stocks, but in stocks in general, you don't tend to see them break and close above their third deviation. So getting a short around that third deviation is always going to be a really high probability trade. And again, we can already see that this pullback started, already pulled back over 20 points from this level, hitting now our second deviation on the 6 month. So again, this is going to be the key thing. Really, if today we can close below $200, it's going to be probably a strong signal that we are going to continue lower. This move to the upside is probably done, at least for the time being. So definitely something I'm paying attention to, and will probably make me add some size to a short if we can get that close, because I did miss the initial touch coming into that third. So 203 obviously is that other level. If we kind of start closing above 203, again, if I was short, I'd probably just be cutting out and waiting for kind of a no confirmation. And the reason for that is close above 203 is a bit more bullish and expects a push back to that 218. So again, it's just using these levels as kind of a confirmational confirmational indicator to either side. So that's how I will be using them. If we did break 218, we break that recent high, then 235 will be that next level I'm really paying attention to, and again, hitting short quite heavily here. So that's what I'll be paying attention to the upside. If though we do get that close below here, we do continue lower. We have supports at 178 and 171. So again, these can be used in two ways. If we're holding this short position, we're definitely looking in some profits coming into this level, moving our stop at a minimum to break even. But if we don't have a position, you're only a long bias trader, we can also look to play the bounces off this level. The first time we hit this, we still expect at least, kind of a 5-point bounce at the minimum off here. So again, we look to play that, move our stop to break even, and see if the move can continue. And that's why we're taking locking some profits, move our stock to break even. So it's essentially a risk-free trade, and we can try and make more money on a bigger move. Obviously, we're looking at that same thing at that 171, and if we break that, then this is where I'm looking to close out my short completely, and that would be at 158, because that is considered fair value. That is our statistical mean on the 6 month. If we break that, we have our next statistical mean at 140. So again, use these as a range. I never look to trade within the areas of statistical means, because again, very kind of hard to trade within this area, especially from a swing trading perspective, going to be quite choppy within this area. Then right below that, we do have our first deviation on the 6 month, 138, not something I'm looking to trade, just for the reason being, if I'm investing, fine, but as a trading opportunity, there's just not a good risk to reward on that. Obviously, we're very close to statistical mean at that level, so we're maybe looking for 2 points of upside, but how much are we really risking to take that trade? Not something I'm paying attention to. Instead, I'd be waiting for a break. We have our a good trading opportunity at 118, breaking low would be 108, 98, going on to 75, and a final level at 45. So these would be the key supports going lower. So that is the main breakdown on Moderna. I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out this analysis video.